Hello students, welcome back to GK's Education. As you all know, our chapter of retirement and death of partner is going on, and we are doing the accounting treatment regarding this matter of retirement and death. Firstly, I would like to request that if you are liking my videos, you are getting your points very much clear. So please do not forget to like and subscribe my channel. So today we are going to do the topic death of a partner. As we all know, we did a retirement of a partner, the procedure in previous videos. Here the procedure is same as compared here the procedure is same as we do in the case of death of retirement of a partner, but few separate things are required, like we are here. And as in the case of retirement, we just make the total payment to the outgoing partner, but here we do not pay the money to the outgoing partner as he's not alive. So we open one different account, that is executor's account, and to the we can say the legal heirs of the person, we make the payment. So how do we deal these things at the time of a death of a partner? Let us check it out in detail. We can say the accounting treatment at the time of death of a partner is same as is similar to as in the case of a retirement of the partner. As I've already told that the treatment, accounting treatment, is same, only few changes are there. In the case of death of a partner, his claim is transferred to his executors and settled in the same manner as that of a retired partner. So as we did in the case of a death of a partner, in the case of retirement of partner, we directly transfer the money to the outgoing partner, but here the claim, the amount due, is transferred to executor's account and is settled then. One major difference is that usually retirement takes place at the end of accounting period. The death of partner may occur anytime. So usually the retirement is takes place at the end of the accounting period, but death is, you can't say anything. So death may occur anytime. The deceased partner's claim shall also include his share of profit or loss, interest on capital, interest on drawings, etc., from the date of the last balance sheet to the date of death. So, the deceased partner, the partner who is not alive, his claim will include the share of profits, interest on drawings, etc., all the things that is due to him at the time. It will also include from the period of the last balance sheet to the date of death. So that the different that part that we can say the period from the date of the last balance sheet to the date of death, that period's share is also due to him and is included in his claim very clearly. The main problem relates to the calculation of profit for the period, that is the date of the last balance sheet and the date of the partner's death. So in these type of cases, the main problem comes out for the case of a profit, as the complete we can say the complete accounting period of balance sheet is not done, only a part of it is done by that time. So the problem of profit arises, that how we calculate. So there are few methods, three methods, which we usually follow. Since it is difficult to close the books and prepare the final accounts for the period, the deceased partner's share of profit may be calculated on the basis of, we can say for that period, the profit is calculated on the basis of last year's profit. Like number one part is, we can calculate on the basis of last year's average profit. The average of the past few years, we can also calculate it on the basis of average of past few years profit, and on the basis of sales, or we can also calculate the profit on the basis of sale by applying the unitary method. So let us check out these three methods in detail. The first part is on the basis of last year's profit. Here we take example, B, C and D were the partners in the firm with the ratio 5:4:1. The profit of the firm for the year ending 31st March was 1 lakh. C dies on June 30. 19. Now calculate the C's share of profit. Here, the total profit for 2019 was 1 lakh. So, we can see mm, the C's estimated profit for the period 1st April to 30th June will be 1 lakh is for the full year. So for 3 months into 5 plus 4 9 plus 1 4 by 10th share of that, it comes out to be 10,000 rupees. And now the entry will be profit and loss suspense account debit to C's capital 10,000 rupees. So it will be the entry of the profit. Now we take the second example or the second case, average profit method. Here in the same case, like same things will be there, but C's profit was to be calculated on the basis of average profit of last 3 years, which were 13,000, which was 1,36,000, 1,54,000, and 1 lakh. Now calculate the C's share of profit from April 2019 to 30th June 2019. How we will calculate the average profit? The case is same. That means he died on 30th June. The last day profit was 1 lakh. So same as there. Only the profit calculation, few things are given. Now here the average profit will be calculated. We will add up the 3 years given profit divided by 3. So it comes out to be 1,30,000. Now 1,30,000 for 3 months into 4 by 10th share. So his average profit comes out to be 13,000. Third case, on the basis of sales. Same example on the basis of sales. Now same case when the sales for the year 1819 were 8 lakh and the sales for the period 1 April to 30th June 19 were 1,50,000. Now calculate sales share. Here we will apply the unitary method. Like if the sale is 8 lakh, then the profit is 1 lakh as given in the question. And now if the sale is 1, then profit 1 lakh upon 8 lakh. And if the sale is 1,50,000, that is given for the 3 months, then profit will be 1 lakh over 8 lakh into 1,50,000. So profit will be 18,750. It is for the it is the whole profit. Now we will calculate the C's share. So C's share is 18 this into 4 by 10, as complete was 5:4:1 complete ratio. So his share was 4 by 10, and here particularly C's share will be 7,500, and the entry will be profit and loss suspense account debit 7,500 to C's capital account 7,500. So these were the three conditions where the profit is calculated on different bases. So let us check out a full-fledged question on this to make our understanding more clear. Here the balance sheet of A, B and C as on 31st March 19 is, so here the things are given: cash at bank, BR, stock, debtors, furniture, plant and machinery, building, advertisement. And here bills payable, employees provident fund, workmen compensation reserve, general reserve, loan, capital accounts of the partners. Now the profit sharing ratio was 3:2:1. C died on 31st July 2019. Now deed provide what the partnership deed provides is goodwill is to be calculated on the basis of 3 years purchase of 5 years average profit. The profits were these were these were the profit of previous 5 years. The deceased partners to be given the share of profit till the date of death on the basis of the profits of previous year's profit will be taken. And now the assets were revalued as these were the assets. Then the sum of this amount was paid immediately. So amount 12,233 was paid immediately to Z's executors, and the balance to be paid in 2 equal installments together with the interest of 10% per annum on the amount outstanding. Now prepare all the accounts and Z's executor amount till the account is finally paid. Now let us check out. First thing we will make is revaluation account. Now revaluation, only assets are taken. So the assets were revalued. Stock is 10,000. Earlier the stock was 9,000. So appreciation 1,000 is entered here. Now the another point is Debtors here is 15,000. Earlier the debtors were 16,000. So 1,000 provision we can say we have created. So sundry debtors, there is a reduction, 1,000 we will enter here. And now next part is furniture, 1,500. Earlier the furniture was 2,000. So 500 is depreciation in the furniture, that we will enter here. And now next part is plant and machinery, 5,000. Earlier plant and machinery was 6,500. So 1,500 is the depreciation, plant and machinery. And then we have, after plant and machinery, we have building, 35,000. Earlier the building was 30,000. So 5,000 again a depreciation. No, sorry, building was 30,000 and now it is 35,000. So 5,000 is the appreciation in the building account. Now we will another point, one point, a receivable bill for 600 was found worthless. Means a bills earlier was receivable 600 is entered in there, but now it is worthless. That means we are not going to receive it. So we will enter, the asset is reducing, so we will enter in the debit side. Now we will balance this account and the profit is divided in the ratio 3:2:1, and it will be directly transferred to capital account. So here 12, 8 and 4 directly be transferred to capital accounts of the partner, 12, 8 and 4. And now check out the capital accounts. The basic balances, 12,750, 15,250 and 12,000. These are the opening balances of the account. And then reserves, the BP will not be there, EPF we can't change, but workmen's compensation reserve 6,000, it will be transferred to them in their profit sharing ratio. And then similarly general reserve of 6,000, it will be transferred to them in their profit sharing ratio. So these will do. And now what will we do? Yes, general reserve loan will stand as such, and then these entries. Now here one more item is advertisement suspense account. So it is also a reserve, advertisement suspense account. It will also be transferred to the partners capital account in their profit sharing ratio, 3,000, 2,000 and 1,000. So these entries are done. Now the question was regarding the goodwill. Goodwill is to be calculated on the basis of 3 years purchase of 5 years average profit. Now 5 years average profit were 24, 16, 20, 10 and 5. Check out the worksheet. Now average profit, add all the profits, divide by 5, so it comes out to be average profit. And goodwill is 3 years purchase of average profit, that is 45,000. Now the old ratio is 3:1. C died, so their remain gain ratio is 3:2. As new ratio is not given, so we assume in all cases that old ratio is the new gain ratio. Now C's share of goodwill, C's share of goodwill will be total goodwill 45,000 and C's share is 1/6, that is 7,500. So 7,500 will be distributed between A and B in the ratio 3:2. So A's share will be 7,500 in the gain ratio. This 7,500 into 3/5, it comes out to be 4,500, and B's share is 7,500 into 2/5, so it comes out to be 3,000. And the entry will be A's capital account debit 4,500, B's capital account debit 3,000 to C's capital 7,500. And by C's capital, here capital accounts in C's account, it will be by A's capital, by B's capital 4,500 and 3,000. And here in A and B's account, it is to C's capital 4,500, 3,000. So these are the entries done. All the entries are done. And now yes, now share of profit. Now previous year's profit was 24,000. How it is given? Yes, here the point was given the deceased partners to be given the share of profits till the date of death on the basis of profits of the previous year. So the first profit was 24,000, that means it is the immediate previous year's profit. Now it will be divided. 24,000 was previous year's profit, so C's share will be 24,000 as he died, 1 by 6th his share, and 4 months as he died on 31st July. So April, May, June, July, 4 months profit will be transferred to him. How? 24,000 is a full year's profit, 1 by 6 is share, and 4 by 12 is share of profit. So the share comes out to be 1333, and the entry will be profit and loss suspense account debit to C's capital account. And in C's capital, profit and loss account suspense will stand by this. So all the entries are done. Now we will balance the amount. First we will balance C's capital account. So the balancing amount comes out to be 22,233. So C's balancing amount we will transfer to C's executor's account as we do in the case of a death of a partner. So by C's capital this amount. And now for we will balance B's capital and A's capital, and their balancing figure will stand in their capital accounts, come up to the executor's account, which we are doing for first time. Now here balance is transferred. We told in the question that we will pay a sum of 12,233 immediately to the Z's executors. So we will pay to Z's executor this amount, and uh, 22,233 minus 12,233, 10,000 is left. So for the coming 8 months, as a financial year comes out to be closes on 31st March, so for the 8 months the balance for 10,000 for 10% for 8 months, as we have to give the interest. It was given that with the interest we will make the payment outstanding. So for 10,000, 10%, 8 months, it comes out to be 667, and the balance will be carried down this amount. Brought down interest for 3 months. How? Because we are making annual payments on 31st July. So for 3 months, we for the 4 months we calculate the interest differently, and for 8 months we calculate the interest differently. Here for the 4 months the interest comes out to be this on the balancing figure of 10,000, and then to bank the amount paid plus interest 667. This was in this interest and plus this period's interest, so the addition comes out to be 6,000. Now 5,000 is left for 8 months. So for 5,000 into 10% into 8 by 12 comes out to be this, and balance carried out on 31st March amount is this. Brought down interest for 4 months this, and total amount is paid on 31st July, this interest plus the base amount, so it comes out to be 5,500. So this was all regarding the death of a partner. I hope you did this chapter step by step very carefully and keep doing it and scoring your marks. Best of luck from me, and do not forget to like and subscribe my channel. Thank you.